Welcome to the Deep Dive, the show where we really try to cut through all that noise and find the signal in the crypto space. And today, wow, we are diving headfirst into something pretty fascinating, maybe even a paradox right at the heart of digital assets. Bitcoin, we all know it. I mean, it's the king, the heavyweight champ of security, of decentralization for ages. It's been pitched as digital gold, solid, secure, a fortress. But, and here's the rub, right? Despite that rock solid foundation, that incredible security, there's been this growing conversation, almost a roar now, about its limits. Specifically, how many transactions it can actually handle, that scalability, and what kinds of things you can do with it, its flexibility. It's kind of like having the most secure bank vault on earth, but you can only open the door like a few times an hour. Okay, let's try and unpack this a bit. How can something so fundamentally strong, so robust, also be seen as, well, limited in today's fast-moving Web3 world? It feels contradictory.
It really does feel like a contradiction. And honestly, that's exactly where the cleverness of Bitcoin Layer 2 solutions L2s comes right into the picture. Think of L2s as the innovative answer to that exact paradox you just laid out. They're these layers built on top of Bitcoin's bedrock foundation. They're specifically designed to, expand what Bitcoin can do way beyond just being a store of value. Their whole mission really is to unlock a whole new set of possibilities within the Bitcoin ecosystem. We're talking fast, cheap payments, sure, but also sophisticated DeFi, decentralized finance, and even things like NFTs. It's all about building upwards using Bitcoin's core strength, but crucially, without messing with those foundational principles.
That's a huge shift in thinking for a lot of people, myself included sometimes, who've always just seen Bitcoin as that digital vault, a static thing. So, okay, for this deep dive, our mission is pretty clear then. We're going to explore why Bitcoin kind of needs these L2s, how these clever bits of engineering actually work to extend its capabilities. Then we'll look at some real-world examples already making waves, and importantly, we'll break down what all this means for you, the listener, maybe as an investor, and just for the whole Web3 landscape in general. We've dug through a ton of material research papers, developer chats, you name it, to really boil it down to the key takeaways, give you a shortcut to understanding this really critical evolution. And this is where it gets really interesting, because it feels like Bitcoin isn't just adapting, it's almost having a renaissance, like right now. Oh, and just before we really get into the weeds here, if you find this kind of deep dive valuable, it would honestly be a massive help if you could hit that like button, subscribe if you haven't already, maybe drop a comment below. Seriously, your engagement, it really helps the algorithms notice us, and frankly, it just lets us keep making this kind of in-depth crypto content for you. It genuinely makes a difference.
Yeah, absolutely. That support means we can keep tackling these complex topics and, try to offer clear insights. Okay, so to really get why these L2s are so necessary, we first have to appreciate what Bitcoin is at its core. Like you said, its identity is just defined by incredible security and that uncompromising decentralization. These aren't just features. They were deliberate design choices. Bitcoin was built from the ground up to resist censorship, to be incredibly hard to change, immutable, and, well, almost impossible to hack or compromise. And that super rigorous design, that's what cemented its status as digital gold, right? The ultimate safe haven, especially when traditional systems look shaky. It's just robust, reliable, resilient.
Yeah, and what's so fascinating, what creates that paradox we started with, is that those exact design choices, the things that make it so secure and decentralized, those core principles also naturally limit how fast it can be and how flexible it is. It's not really a flaw, right? It's more like a deliberate trade-off they made back then. Yeah. To get that level of security, that decentralization, the original designers prioritized those things over, say, raw transaction speed or running really complex programs right on the main network. It's like that fortress analogy again. Incredibly strong, can withstand anything, but probably not the best design for a super fast highway with thousands of cars whizzing by every minute.
Exactly. That's a great way to put it. And that trade-off leads us straight into the bottleneck, as we can call it. Bitcoin's built-in limits on scalability and flexibility right there in its base layer. So when we talk about on-chain transactions, we mean anything happening directly on the main Bitcoin blockchain, getting recorded there permanently. And that base layer, well, it's designed for security and reliability first, not for handling, thousands of transactions every second. So what happens? Users often get stuck with slow confirmation times. Sometimes when the network's busy, it can take minutes, even hours for a transaction to go through, which, let's be honest, is just not practical for buying coffee or for the kind of split-second financial stuff that needs immediate confirmation. And on top of that, it's not just slow, it can get really expensive too. Those transaction fees. Imagine having to pay like several dollars, maybe even $10, $20, just to send a small amount of Bitcoin, especially when everyone's trying to use the network at once. We've all seen those charts, right? BTC transaction fees over time. They show these huge spikes whenever demand goes up. Think back to the 2017 bull run, or even more recently with all the ordinals activity. Fees just went through the roof, and that makes tiny payments or lots of small transactions basically pointless from an economic standpoint for the average person. So what those charts really tell you about the user experience on the base layer, it can get frustrating. It can get expensive, fast. Very different from the instant, almost free digital payments we kind of expect now. And beyond just speed and cost, there's this other big hurdle, limited programmability. Bitcoin's own scripting language, they just call it script, it's deliberately kept simple, minimalist. Sure, it can handle things like wallets needing multiple signatures or transactions that only unlock after a certain time, some basic stuff. And that simplicity, it really helps with security, makes it predictable, but it severely limits your ability to build, say, complex smart contracts or those advanced apps directly on the main Bitcoin chain. It's not like Ethereum or other platforms that were built specifically for smart contracts.
Bitcoin's base layer just isn't set up for that kind of complex logic or managing ongoing states, the stuff you need for today's DeFi or NFT markets. It wasn't built for it. And that creates this gap, right, between Bitcoin's huge pool of secure capital and all the innovation happening in Web3.
Okay, so if Bitcoin's greatest strength, its very design, is also the source of these limitations, then L2s start to look less like a nice to have and more like, well, absolutely essential. They're the elegant fix. These layers build on top of Bitcoin, specifically designed to get around those bottlenecks without, and this is the key part, right, without compromising the core security and decentralization that makes Bitcoin Bitcoin, which then raises this really big question, almost a philosophical one, about Bitcoin's future. How do these layers actually add all this functionality without fundamentally changing the core rules, the original vision? It sounds a bit like magic, maybe. But I guess it's just really clever engineering. Still, are there any trade-offs these LTs have to make?
That's the million-dollar question, isn't it? And no, definitely not magic, though it is some seriously impressive cryptographic engineering. The core idea behind how these Bitcoin L2s work is pretty fundamental. You move the bulk of the transaction activity off-chain, so away from the main Bitcoin blockchain. Then you only interact with that main layer periodically, maybe to securely settle the final outcome or anchor the results of all those off-chain transactions. And that's basically how they manage to get much, much higher transaction speeds and dramatically lower costs. It's like building an express lane next to Bitcoin's super secure but slower main road. When we talk scalability, Lightning Network is probably the best known example, and it's already being used quite a bit. Lightning lets people do what they call fast, cheap micropayments. How? By opening up these direct payment channels between users. Inside these channels, you can send money back and forth like almost instantly, countless times, for basically no fees. And crucially, none of those individual transfers clog up the main Bitcoin blockchain. Only when you first open the channel, or when you finally close it out, or if there's some kind of disagreement, only then does it touch the main layer. That takes a massive load off the main chain. And we've seen the Lightning Network capacity growth. Charts, the amount of Bitcoin locked in these channels keeps going up. That shows real adoption, real capability growing. And that growth matters because it signals, hey, this network is actually getting ready for broader use, for everyday payments that just wouldn't work on the main chain. Imagine buying your coffee, paying for Netflix, sending money overseas with Bitcoin, all settled instantly for pennies. That's what Lightning promises. Now, it's not perfect, right? There are challenges like making sure there's enough liquidity for payments to get routed correctly, or the fact that you technically need to be online to make sure no one cheats. But there's a lot of work happening to solve those things too, like with channel factories and stuff.
Right. And it's not just about making the simple payments faster and cheaper. These L2s are also opening up that whole other dimension. Programmability. Making Bitcoin do more than just send value. Suddenly, yeah, we're talking actual smart contracts, these self-executing deals where the rules are baked right into the code. L2s make it possible to run these, which is largely impossible on Bitcoin's base layer because of that simple script language we talked about. And that just opens up a whole new world for Bitcoin. Just think about the possibilities, like advanced DeFi functions, but tied directly to the most secure digital asset out there. We could see complex lending platforms where you use your actual Bitcoin as collateral, decentralized exchanges, AMMs, all sorts of financial services operating right there in the Bitcoin ecosystem. It's like taking all that innovation, sometimes maybe experimental stuff we see on other blockchains, and bringing it into Bitcoin's orbit, using its security without jamming up the main network. That doesn't just make Bitcoin more useful, it could also bring a new level of stability and, frankly, trust to the whole DeFi space.
And what's really cool and super important to get is that while these L2s enable all this new stuff, they don't replace Bitcoin security. They actually inherit it. That's a fundamental point. It underpins the whole L2 idea. How they're designed ensures they regularly report back, you could say, to the main Bitcoin blockchain. They commit their current state or handle any disputes by anchoring back to that base layer. So what does that mean? It means the security guarantees of Bitcoin's massive network, its immutability, its resistance to censorship, that proof-of-work finality they ultimately extend to protect what's happening on the layer 2. Take Lightning, for example. If someone tries to cheat in a payment channel, the proof of that fraud can be enforced on the main Bitcoin chain. Bitcoin acts as the ultimate judge. Or look at sidechains like Rootstock. They use something called merge mining, where Bitcoin miners can secure Rootstock at the same time as they mine Bitcoin, linking their security. So if we zoom out, this design means that even while you have fast innovation and tons of transactions happening on L2s, the core trust and integrity of Bitcoin itself isn't compromised. You're not trading security to get features. You're getting features because of that underlying security. It makes the whole system stronger, more trustworthy.
Right. That makes perfect sense. And that security inheritance, that ability to scale up and innovate without breaking Bitcoin's core promise. That's exactly why these L2s feel so strategically important for Bitcoin's future. Not just as digital gold, but as a platform that can actually do things. Because let's face it, without them, there's a real risk, right? That other platforms, Ethereum, Solana, you name it, just keep dominating all the new Web3 use cases. If Bitcoin just stays as the digital gold vault and nothing else, it risks kind of missing out on DeFi, on NFTs, on all the decentralized apps that are shaping the next internet. So L2s aren't just about tech specs or making things faster. They're about making sure Bitcoin stays relevant, that it competes for developers, for users, for capital in this incredibly fast-moving Web3 world. They're the tools that let Bitcoin build out a whole ecosystem around itself, transforming it from just a passive asset you hold into an active, functional part of the future internet. It's about Bitcoin really claiming its spot at the center of the digital economy, not just as a reserve, but as a living platform.
Exactly. And look, this isn't just theory anymore. We're seeing real projects, pioneers out there, already showing the impact of these L2s. Lightning Network, like we mentioned, is a fantastic example of a scaling solution that's already making a difference in actual everyday payment.
Oh, for sure. Lightning isn't just a white paper idea now. It's being used. Look at El Salvador, right? The first country to make Bitcoin legal tender. A lot of the day-to-day Bitcoin spending there, buying groceries, paying bills, it relies heavily on Lightning because it's fast and cheap. Or think about companies like Strike. They use Lightning for sending money across borders, remittances, almost instant, way cheaper than old-school bank wires. These examples really show how Lightning can make Bitcoin practical for everyday stuff, not just something you hold and hope it goes up. Now, obviously, getting everyone in the world using it smoothly still has challenges, making it easy to use, making sure routing works perfectly, but the progress is undeniable.
And then there's another key player, Stacks. You might know it by its token, STX. Stacks is really focused on bringing smart contracts and NFTs to Bitcoin. It's technically a separate blockchain, but its security is cleverly tied back to Bitcoin's proof of work through this unique mechanism called proof of transfer, or PODX. Basically, Stacks transactions get bundled and settled, secured by Bitcoin's own blocks. This lets you have complex apps without changing Bitcoin itself. So developers can build apps, issue NFTs, all secured by the oldest, most secure blockchain out there. And we can actually track how this BTC native DeFi is doing by looking at things like Stacks TVL, total value locked in its developer activity. If TVL is growing, it means more money, often wrapped Bitcoin or STX, is being used in the Stacks ecosystem. That signals trust, signals utility. And seeing lots of developers building things, that means a healthy, growing community, which is vital. These numbers give us real clues about how a Bitcoin DeFi world is shaping up. What's really powerful is how Stacks lets you do things like mint NFTs or use your Bitcoin and lending protocols, all while it stays secure by Bitcoin. That unlocks a ton of capital that was just sitting there before.
And we should also mention Rootstock, RSK. That's another important one, been around a while, and its big thing is being EVM compatible. Now, why does that matter? EVM compatibility means it can run smart contracts designed for the Ethereum virtual machine. This is huge because there's this massive community of developers who already know how to build for Ethereum. They have the tools, the experience. RSK lets them take their existing skills, even existing code, and deploy it on a network secured by Bitcoin. It massively lowers the barrier for building dApps in the Bitcoin world. So what really stands out there is the versatility, right? You're kind of bridging the innovation and developer base of Ethereum with the rock-solid security of Bitcoin. best of both worlds, potentially. We've seen projects like Sovereign, which is a DEX and lending platform, build on RSK, showing it works in practice for Bitcoin DeFi.
And, if you needed one single clear example of why these scaling solutions are so desperately needed right now, just look at what happened with ordinal inscriptions recently. These are basically NFTs, images, text, data attached directly to individual Satoshis, the smallest unit of Bitcoin. Now, super interesting idea, right? Expands what Bitcoin can be used for, culturally. But when that ordinal NFT activity on Bitcoin just exploded, the demand for space on the main Bitcoin chain went absolutely crazy. And what happened? Those BTC transaction fees over time shot up again, dramatically. For a while there, sending a basic Bitcoin transaction became super expensive and painfully slow. That whole episode was like a real-time stress test. It showed very clearly the network's limits when faced with something new, high volume, that wasn't just a simple payment. It just screamed, we need better ways to scale. We need solutions that can handle all this new stuff without breaking the core use case. It showed Bitcoin could be more than just a ledger, but that versatility came at a cost on the base layer.
Yeah, it was almost the perfect storm to highlight the bottleneck. And the cool thing is we don't have to completely guess what successful scaling looks like or if it can even work because we've seen it play out elsewhere. We can look directly at Ethereum and learn from their experience with layer 2s. Platforms like Arbitrum, Optimism, these are big Ethereum L2s, rollups mainly. They haven't just proved L2s work, technically. They've shown how L2s can end up handling the vast majority of the network's activity. They absolutely dominate activity now. If you connect that to the bigger picture, these Ethereum L2s are processing millions of transactions that would simply crash the main Ethereum chain if they all happened there. They basically extend Ethereum's capacity, add features, make it usable for way more people. It's proof positive that a healthy L2 ecosystem is a total game changer for a blockchain's usefulness, its adoption, its future. So that gives us a pretty solid real-world model for what Bitcoin L2s could become. It hints at a future where Bitcoin isn't just storing value securely, but maybe even processing a huge chunk of Web3's daily business.
Okay, let's shift gears a bit and talk about the impact, the implications of all this, especially for investors, for traders. What does it all mean? Well, first off, just expanding Bitcoin's utility like this is huge. If Bitcoin can be used effectively for more things, fast payments, DeFi, NFTs, that creates more diverse, more sustainable demand for BTC itself. It's not just about people buying it to hold as digital gold anymore. It's about people needing it to use these L2 applications. That fuels a really powerful long-term bullish narrative for Bitcoin. Its value could increasingly come not just from scarcity, but from its essential role across Web3. It moves Bitcoin from being just a passive asset to an active working part of the digital economy.
And that utility expansion also shakes things up in terms of competition with altcoins, right? I mean, if Bitcoin L2s really take off, they attract the developers, build cool apps, get users, they could potentially pull a lot of that DeFi and NFT activity away from platforms like Ethereum or Solana. Just imagine if a big chunk of the money currently locked in DeFi on other chains starts moving over to Bitcoin L2s because people prefer the underlying security. That could seriously shift the market dynamics. Investors might start prioritizing DeFi or NFTs built on Bitcoin's foundation, seeing it as safer or more durable, which also means if you're looking for investment signals, watching the early adoption of these Bitcoin L2s, seeing where the money is flowing within that ecosystem, that could be really telling. Smart investors will be watching which L2s are getting traction, where are the developers building, which ones have real users and growing liquidity. Those could be massive clues about where the next wave of investment might go in the next bull cycle. It could drive value not just to the L2 tokens themselves, but back to BTC as the core asset of this expanding ecosystem. You could even look at the BTC dominance chart, Bitcoin's market share versus everything else, and wonder, could successful L2s actually push Bitcoin's dominance higher as its overall utility grows? It's a really interesting possibility. It could reshape the market.
And thinking beyond just investors, the whole Web3 ecosystem stands to benefit hugely as Bitcoin L2s mature. We're already seeing the start of a real BTC DeFi sector emerging. Protocols on stacks, on Rootstock, even things happening with Lightning for finance. They're building out a decentralized finance world directly linked to Bitcoin. And this isn't just about copying what Ethereum did. It's about potentially building more robust, maybe more transparent financial tools that leverage Bitcoin's unique security. That could attract a lot more serious, maybe even institutional interest down the line. Another really critical point here is reducing the reliance on those, frankly, risky cross-chain bridges. Historically, if you wanted to use your Bitcoin in DeFi on, say, Ethereum, you had to rapid turn it into something like WBTC and then send it across a bridge. And unfortunately, those bridges have been major targets for hackers. Billions lost. Huge security headache.
Bitcoin L2s offer the promise of using your native BTC in DeFi, meaning your actual Bitcoin could potentially stay secured by the Bitcoin network while you use it for lending, trading, whatever on an L2.
That fundamentally reduces the risk compared to sending assets across different chains. It brings the security focus back to Bitcoin itself, which should make users feel a lot safer.
That's a massive improvement for security, yeah. Builds confidence, which ultimately helps the whole DeFi space grow more sustainably. And speaking of confidence, there's also this interesting angle about regulation and mainstream adoption. Bitcoin, partly because it's been around so long, it's pretty decentralized, often classified as a commodity. It's generally seen as the least controversial asset for regulators, especially compared to thousands of other altcoins. It has a kind of established legitimacy. So if you have these robust, maybe more easily audited L2s building on top of it, that could actually speed up mainstream adoption. It could offer clearer, maybe even regulated pathways for big institutions or regular folks to get involved in more advanced crypto activities, but still anchored to Bitcoin stability. Imagine big financial players being able to interact with DeFi protocols secured directly by Bitcoin, maybe within frameworks they understand. That could unlock enormous amounts of capital. So, tying it all together, what does this all mean for you? Listening right now, trying to figure out the future of digital money and regulation, it means Bitcoin isn't just that thing you buy and hold anymore. It's changing. It's evolving into this dynamic platform that's actively building out a whole ecosystem around itself. An ecosystem that could seriously change its role in the world. It's aiming to be more than just digital gold. It's trying to be a foundational layer for a new kind of internet.
Absolutely. So just to recap this whole deep dive, Bitcoin's L2s, they're not just a minor upgrade. They feel essential, transformative even. They're critical for scaling the network so more people can use it cheaply. They unlock programmability for all sorts of new applications. They cleverly inherit Bitcoin's unmatched security. And they're fostering this huge growth in the ecosystem around Bitcoin. It really signals this profound potential for Bitcoin to become much more than digital gold. It could become a central active platform for Web3.
It's definitely an exciting time, maybe even a pivotal moment to be watching Bitcoin evolve like this. So as we finish up, we want to leave you with something to think about, a question that really builds on everything we've talked about: Bitcoin's security strengths, the new power of its L2s.
Yeah, think about this. If you were an investor or maybe a developer looking to build the next big thing, would you rather put your energy, your capital, into building DeFi on these emerging Bitcoin L2s, banking on that security, or would you stick with the more established ecosystems like Ethereum and Solana, which have their own strengths but maybe different trade-offs around volatility or decentralization? And taking a step further, could successful widespread adoption of Bitcoin L2s actually make Bitcoin the undisputed king of both money and DeFi? Could it become the central hub for pretty much all Web3 innovation? Or are we more likely heading towards a multi-chain future where lots of different ecosystems coexist and specialize? It's a huge question, and the answer could really shape the entire crypto world for years, maybe decades to come. Definitely something worth mulling over.